What if part of your investment portfolio gave you a pay raise every single year, no matter what the market's doing? If you're tired of guessing which stock might take off next, or watching your account dip every time that there's bad news in the market, these stocks that we're about to go over might give you the stability that you've been missing. So in this video, I'll show you how Dividend Aristocrats can create a growing stream of income and help you build long-term wealth with a lot less stress. So real quick, what exactly is a Dividend Aristocrat? So in simple terms, it's a company that's in the S&P 500 that's managed to increase its dividend payout every single year for at least 25 years straight.
Damn!
That's not just paying a dividend. These companies are actually raising the amount that they pay out year after year as well. So through bull markets, bear markets, recessions, and everything in between. Now, you might be thinking, okay, but how many companies actually pull this off? Well, as of 2025, there are 66 Dividend Aristocrats, and they're spread out across all kinds of different industries. So healthcare, consumer goods, finance, industrials, and more.
To put it in perspective, fewer than 15% of all S&P 500 companies qualify as Dividend Aristocrats.
Yeah, exactly. It's pretty exclusive. You won't find any brand new startups or meme stocks here. These are the companies that have been around, weather the storms, and keep rewarding their shareholders through thick and thin. Now, if you're curious which ones are my absolute favorites right now, make sure to subscribe, as I'm going to share a list of them in my next video. But why do these companies go out of their way to keep raising dividends, even when times are tough? Well, let's dig into the power of consistency and why it's such a game changer for investors. Let's be honest, most investors, they want something that they can count on. The market goes up, the market goes down, but wouldn't it be nice if at least part of your portfolio felt like a steady paycheck? And that's exactly why Dividend Aristocrats matter. So imagine getting a pay raise from your job every year, no matter what's happening in the world or within your company. That's what owning these feels like. Now, as an investor, why does this matter for you? Because that kind of track record is a huge signal that a company is financially healthy and also run by people who know how to manage through those tough times. But here's something that's even better about them. These companies actually help smooth out the wild swings of the stock market. So companies that grow their dividends have historically delivered higher returns with less risk compared to companies that don't pay dividends at all, or worse, they cut them when things get tough. So let's put this into a real life scenario. Say you're building your investment portfolio and you want to sleep well at night. You add some Dividend Aristocrats to the mix, and over the years, even when the market takes the inevitable dip, those growing dividends can help really cushion the blow and keep your income rising. And here's a bonus. Because Dividend Aristocrats come from all kinds of industries like consumer goods, healthcare, finance, and more, they can really help diversify your investments, making your overall portfolio more resilient. So if you're tired of the volatility of the stock market and want something that feels more like a reliable paycheck, this is why Dividend Aristocrats have such a devoted following. But the real magic is how these companies actually make investors money year after year. So let's break down exactly how that works next. So here's something that most people overlook. Making money with Dividend Aristocrats, it isn't just about, watching the stock price go up. The real magic is in how these companies quietly build your wealth, even when the market is throwing a tantrum, right? That's by far the biggest thing. So let's break it down here. So when you invest in a Dividend Aristocrat, you're getting paid in two ways. First is the dividend itself, which is a cash payment straight into your account just for holding the stock. And that's completely passive income that you can actually use. So whether you want to pay some bills, buy more shares, or just treat yourself to something nice. Now, for a lot of people, this steady stream of cash is a game changer, especially if you're looking for ways to cover expenses or even supplement your paycheck. Now, because Dividend Aristocrats, they raise their payouts every year, your income will actually keep growing along with it. But here's something that most people don't realize. Investors are way less likely to sell a Dividend Aristocrat. Why? Well, it's all about those steady growing dividend checks. When you know you've got a payout coming every quarter, every month, every year, whatever, and that payout has gone up for decades, it gives you a reason to hang tight, even when the market gets noisy. Plus, these companies are usually slow and steady by design. They're mature businesses, so their stock prices, they don't usually swing very wildly like, the latest tech startup. That means you're not constantly tempted to panic sell during a dip because the value of your investment isn't bouncing all over the place. Instead, you get the peace of mind that comes from reliable income and a portfolio that's less vulnerable to big changes. Now, let's talk about the power of compounding here, which is really the true secret to wealth. So if you take those dividends and you reinvest them, meaning that you use the cash that you get to buy more shares, your returns can really snowball. So over time, you own more and more of the company, which means your future dividends get even bigger. So it's like planting a tree and watching it grow more fruit every season, then, taking the fruit, taking those seeds and planting even more trees. While your dividend payments may not be as much at first, right? The compounding effect over multiple years of stock appreciation and dividends increases can really, really make a difference.
Historically, dividends have made up about 40% of total S&P 500 returns. Reinvesting them is where real compounding kicks in.
Yeah, and once compounding kicks in, the strategy gets really profitable. So here's a quick hypothetical. So let's say that you invest $5,000 in a Dividend Aristocrat with a 3% yield. That's $150 in dividends the first year. Now, if the company raises its dividend by 6% annually, which is close to the group's historical average, by the way, over the last decade, next year you get $159 and so on. If you keep reinvesting, the growth compounds and your wealth and your income can really take off. And don't forget too, while stock prices can be unpredictable, if they're increasing, you're also growing your portfolio profits even further. And one big bonus, during rough patches in the market, Dividend Aristocrats, they have a reputation for delivering very steady returns and lower volatility compared to the rest of the S&P 500. That means that there's less stress for you when the headlines get scary. But what's their secret, right? Why are these companies able to keep this streak going and succeed when others just can't? Well, that's where the real story gets good, and we'll dig into that next here. So here's the deal. Dividend Aristocrats, they aren't just big. They're reliable moneymakers. These are companies that generate tons of steady cash even when the economy gets bumpy. So think about brands like Coca-Cola or Johnson & Johnson. People keep buying their products whether the market's booming or in a slump, which means these companies can keep paying and raising dividends without breaking a sweat. But there's more under the hood. Now, most Dividend Aristocrats, they have what you call a defensive business model, right? That means that they sell stuff people need no matter what, like, toothpaste, snacks, or household essentials, right? This steady demand helps them weather storms that might sink flashier trend-driven companies. And another big reason that these companies succeed is financial discipline. So Dividend Aristocrats are famous for being very careful with their money. They don't, blow cash on risky projects or wild acquisitions. Instead, they really focus on what works, they keep their costs in check, and they make sure that they can afford to reward shareholders every year. That's why you don't see a lot of the, next big thing hype with these stocks or huge gains quarter after quarter. They're really more about slow and steady wins than the different moonshots that other stocks take, right? And let's not forget about leadership either. So to keep a dividend streak going for 25 years or more, management teams have to think long term, right? So they plan for the bad years, not just the good ones. And they're also laser focused on protecting the company's reputation as a reliable payer. And that's a huge deal for investors who want to know their money is in good hands and will continue moving forward. So while these companies, they might not always be the fastest growers, right? They're just not. But their secret sauce is all about resilience, reliability, and commitment to rewarding investors. But what is it that you need to watch out for with these investments? Are there any risks? Well, of course there are. So let's cover that next. So I know that Dividend Aristocrats, it sounds awesome, right? But they're not a cheat code for risk-free wealth. Far from it, right? If you're thinking about adding these stocks to your portfolio, you need to know what could trip you up, right? So here's the first thing that most people miss. Just because a company has a long streak of raising dividends doesn't mean that it's bulletproof. Even the best run businesses can hit a rough patch. So for example, during the COVID-19 pandemic, some aristocrats struggled to keep their streak alive as profits took a hit and cash flow really dried up. If a company faces a big enough setback, it might have to cut its dividend, which can tank the stock price and your income stream overnight. So with these companies, it's not common, but it's still possible that it can happen. Another thing to watch out for is growth, or the lack of it, right? So most dividend aristocrats are mature, stable companies. And that's great for consistency, but it also means that you probably won't see the explosive gains that you might get from, a tech stock or a fast-growing startup. So if you're hoping to, double your money in a year, don't do that, by the way, if you're in that mindset, go long term. But even in a couple years, these stocks, they might feel a little bit too slow and steady for your taste. And don't forget about sector risk either. So even though dividend aristocrats come from all sorts of industries, some sectors like, consumer staples and industrials are more heavily represented with this. So if you go all in on aristocrats, you could end up with a portfolio that's not as diversified as you think it is. And if one sector gets hammered, it can drag down your returns more than you'd expect. So just pay attention to the industries that you're investing in if you go this route. And now here's what I'd say a sneaky risk that most people, they just don't think about. So high yields can be a red flag. Sometimes a stock's dividend looks huge because the share price has dropped, maybe for good reason, like financial trouble. So if a company can't actually afford its dividend, that payout might disappear really fast. So always check the company's payout ratio, which is how much of its profits go towards dividends, and make sure it's not stretching itself too thin. And one more thing that you can't overlook with this is taxes. So unless your dividend stocks are sitting in a tax advantage account like an IRA or a 401k, you'll owe taxes on those dividend payouts, even if you reinvest them. Qualified dividends are usually taxed at a lower rate, but it's still something to factor in when you're actually considering your returns. So while dividend aristocrats can be a great foundation for building wealth, you've got to go into this with your eyes open. The real winners are the investors who understand the risks and manage them effectively. But if you're ready to take the next step, let's talk about how you can actually invest in these companies and set yourself up for steady growing income. Now, there are many different companies to choose from if you want to start investing into dividend aristocrats. And as a quick reminder again, I'm going to be covering my absolute top recommendations in the next video that I publish. So just make sure that you subscribe for that. But for beginners, I'd say one of the best things that you can do is invest in a dividend aristocrat ETF. So these are funds, they do all the heavy lifting for you by holding dozens of companies that have raised their dividends for 25 years straight. So you get instant diversification, less stress, and a steady stream of income. Now, the most popular choice is the ProShares S&P 500 Dividend Aristocrats ETF, which is ticker symbol NOBL, which only invests in companies that have a proven track record of increasing payouts for at least 25 years. Another solid option is the SPDR S&P Dividend ETF, which is ticker symbol SDY, which focuses on companies with a long history of reliable dividends, and the Schwab US Dividend Equity ETF, which is ticker symbol SCHD, known for its quality and yield. You can buy any of these ETFs through your regular brokerage account, right? Just like you'd buy a regular stock. And the best part is you don't have to research every company or worry about missing a dividend payment. The ETF will actually handle all those details for you, and you get paid quarterly as long as you hold the fund. Now, before you go all in on dividends, let's ask a smarter second opinion, right? So in this video right here, I'll show you what AI has to say about whether dividend investing is actually worth it.